The next crypto bull run is closer than you think, and some say Ethereum is on its way to $10,000 as early as next year. That's why today I'll be covering the most exciting events coming to Ethereum in the next bull run and my full price prediction for ETH over the next 2 years. Welcome back to the Virtual Bacon channel. My name is Dennis. I'm a crypto angel investor for the past 5 years and I have invested in over 100 crypto startups. On this channel, I share my views on market trends and investing strategy to build wealth in crypto. To me, Ethereum is no longer just another altcoin. Rather, it has become a common goods asset just like Bitcoin. In the last 2 cycles, Ethereum has solidified itself as the number 2 largest crypto that cannot be overtaken. Most other altcoins in the top 10 rankings have come and gone, but it is looking highly unlikely for any new altcoins to flip Ethereum. Ethereum's market cap today sits at just below $200 billion, while Bitcoin's market cap is only at $500 billion. So Ethereum is worth 40% of that of Bitcoin's valuation. That is not an easy feat. In fact, Ethereum has held this 40% ratio against Bitcoin since the 2021 bull market, and it has continued to hold up its value against Bitcoin in the bear market for more than 800 days. In comparison, most other altcoins have been losing value against Bitcoin in this same period. Taking a look at the chart of the total market cap of other altcoins divided by that of Bitcoin's, we see the entire altcoin market has dropped about 40% against Bitcoin in the past year. This pattern happens in every crypto cycle. Old altcoins get washed out and are replaced by newcomers in the next hype wave. That's why it's so impressive for Ethereum to have escaped this altcoin trap. Ethereum is also one of the only coins that's safe from regulation. It has been named multiple times as a commodity by the US courts, the CFTC, and the SEC. Back in 2022, the CFTC has declared Ether as a commodity. And more recently, in the Binance lawsuit and the Uniswap lawsuit, the US courts have also classified Ether as a commodity in their court filings. The classification of cryptocurrencies as either commodities or securities is super important because it impacts how they are regulated. Generally, securities are more highly regulated than commodities and they cannot be so freely traded. Commodities are also taxed more favorably than securities. This is because commodities are usually defined as basic goods that can be bought, traded, or exchanged, for example, oil, grain, lumber, or gold. They are natural or agricultural resources and often are finite. And thus, these commodities are considered stores of value because they hold value over time. Unlike a security, for example, like shares of General Motors that have fluctuated dramatically over time. This is why we see most of the regulated TradFi platforms in the US only offer Bitcoin, Ethereum, and Litecoin to their customers. They don't want the risk of altcoins that could be deemed as securities. But offering commodities for trade is much safer. With its resilient market dominance and it being a commodity, I would classify Ethereum as its own asset class instead of a startup altcoin. This means Ethereum could potentially hit much higher valuations than typical stock valuations. The value of Ether should be calculated based on long-term scarcity and utility just like Bitcoin and gold. And it does not need to consider company treasury, earnings, and other business metrics. This is the benefit of a true cryptocurrency without a central entity controlling it. Now, we still need to mention the wide range of Ethereum killer projects. Can other blockchains come up and replace Ethereum's current position? In my opinion, the answer is no, but with a small caveat. You see, Ethereum has beat all its competitors in the 2 biggest use cases, which are DeFi and NFT. I'm using DeFi as a general term here, which includes exchanges, lending, farming, liquid staking, ICOs, tokenization, etc. Essentially, every use case that is to do with money and finance are being built on top of Ethereum. You can see this with the total value locked on all blockchains today. 69% of them are locked on Ethereum. And many of the other blockchains like Avalanche, Optimism, Polygon, Arbitrum, or BSC either use the Ethereum EVM technology or are building a layer 2 blockchain that sits on top of Ethereum. This makes sense as Ethereum is the most secure blockchain by economics. It takes the largest amount of money to attack and thus people have the most trust to deposit large amounts of money on Ethereum. Even the high-frequency DeFi applications like perpetual exchanges are all migrating to Ethereum using layer 2s, which are much cheaper and faster while maintaining the same security of Ethereum mainnet. Collectible NFTs also all live on Ethereum today because again, the chain has the longest uptime and highest security, which makes the NFTs survive the longest test of time. This is why Ethereum killer blockchains will have a hard time to survive the next cycle. For the project which continue to copy the use cases of Ethereum and only offer a cheaper and faster environment, they will most likely die and be replaced by Ethereum layer 2s. However, here's the major caveat. There are many more potential use cases of the blockchain which do not involve money or finance, such as, for example, social media, cloud computing, AI, or even real entertainment that's not play-to-earn gaming. These areas can still birth new layer 1 blockchains that sit outside of the Ethereum use cases. Solana is the clearest example of this direction. Some other names include Filecoin, ICP, Arweave, Tobinet. These to me are much more interesting projects than the Ethereum killers from the last cycle. I still hold a few Ethereum killers in my portfolio, and to see which ones, check out my crypto portfolio video linked in the description. In short, I fully expect all financial use cases of the blockchain to converge onto Ethereum in the long term. Comment below if you agree that Ethereum has won this race, or if there's any other blockchain that still stands a chance. Next up, let's cover some of the major catalyst events coming to Ethereum in the next few years. The first major upgrade area is around scaling Ethereum by lowering its costs. While the transaction speed problem has mostly been solved with layer 2s, the transaction cost is still a major issue. Today, the layer 2 rollups are about 3 to 8 times cheaper than the Ethereum layer 1. This is acceptable for DeFi use cases. However, a transaction on these layer 2s can still cost 10-15 cents, which are not okay if you're doing high frequency non-financial use cases, for example, for social media or gaming. In the next 2 years, these cost issues will be solved by 2 major upgrades. Number 1 is the advancement in ZK rollups. ZK rollups will soon lower the transaction fees by another 40 to 100x. This is possible because ZK rollups only need to provide validity proofs to finalize transactions on Ethereum instead of posting all of their transaction data on-chain like optimistic rollups. The high cost issue of optimistic layer 2 rollups come from the data storage part in order to run the layer 2. So by reducing the amount of data you need to store on the Ethereum layer 1, ZK rollups really help solve the transaction cost issue. ZK rollups are also more secure than optimistic rollups such as Arbitrum or Optimism, since there are no delays when moving funds from a ZK rollup back to the Ethereum mainnet. On the optimistic rollups, you often have to use a third-party bridge like Layer 0, Synapse, Multichain, etc. And these third-party bridging is one of the most dangerous areas in crypto that constantly get hacked due to their centralized design. Hundreds of millions of dollars were lost in the past 2 years across most of the third-party bridges. This is why Vitalik has said that ZK rollups will be the ultimate layer 2 solution that's powering Ethereum in the future. The first 3 major ZK rollup networks are already live on mainnet today, and they are ZK Sync Era, Linea, and Polygon ZK EVM. And I think layer 2s will be a big winner in the next cycle. If you want to see which layer 2s are the best in the market, I made a detailed video for this and I'll leave the link in the description. The other major fee upgrade coming to Ethereum is called Proto-Danksharding, which is set to launch by the end of 2023. With this change, there will be another 100 to 1000x in cheaper gas fees for all Ethereum layer 2 transactions. This is achieved by introducing a new type of storage called blob to the Ethereum blockchain. These blob storage are cheaper because they are not permanent, and instead they get deleted from Ethereum once they are no longer needed. This blob storage is the perfect place for rollups to store their data in order to function. Therefore, Proto-Danksharding not only benefits Ethereum itself, but also improves all of the layer 2 scalability across the entire Ethereum ecosystem. So look out for the hype around layer 2s coming by the end of this year. Another major area that Ethereum is focusing on is to improve its user experience for the mass retail audience. Ethereum accounts today are protected by private keys and seed phrases. However, this is not intuitive. If you lose your keys, they cannot be recovered, and stolen keys give the thieves instant access to all the funds in an account. In order for Ethereum to reach mass adoption without relying on centralized third parties, there must be a straightforward, frictionless way for a user to take custody of their assets and keep control of their data without having to understand this complicated cryptography. The solution to this is called smart contract wallets, which gives the end user much better benefits, including defining your own security rules, the ability to recover your account in case you lose your keys. You can even share your account security across multiple devices or individuals. You can have someone else pay for your gas fees, so you don't need to buy some Ethereum in order to make any transactions. You can batch transactions together, and there are more opportunities for dApps and wallet developers to create more user experiences. And keep in mind, these are not third-party custody wallets that you find on centralized exchanges, but rather smart contract wallets are a whole new upgrade coming to Ethereum that will enable these powerful wallets natively. And the best part is, these smart wallets are just as secure as the current Ethereum wallets that rely on seed phrases. They will still be 100% self-owned self-custody. The main initiative on Ethereum smart wallets today goes by the code EIP4337, and this main protocol upgrade has already gone live in March this year. Smart wallets will be a major area of focus for Ethereum in the coming years. Just last week, Ethereum Foundation has awarded 18 teams with grants to specifically develop account abstraction technology. I personally can't wait to have a much smoother user experience and ditch the complicated MetaMask. So look out for major wallets innovation coming to Ethereum in the next couple years. Lastly, there are two major catalysts that will generate buying demand for the Ether coin itself. First is the increase in Ethereum staking. You see, Ethereum has one of the lowest staking ratios among all blockchains. Currently, only about 20% of all Ethereum is staked on the network. In comparison, some of the other proof-of-stake blockchains like Solana, Cardano, Aptos, Tron, Sui, Polkadot, etc. all range between 40 to 70% of all coins staked. This is because large holders of Ethereum could not trust the proof-of-stake upgrade of Ethereum 2.0 before it was launched. You might not know this, but Ethereum has already had staking way back in 2020. However, all of the staked Ethereum were locked indefinitely until the Ethereum 2.0 upgrade was finally complete. This all changed in April 2023 with the Ethereum Shanghai upgrade, which finally introduced staking withdrawals to Ethereum. This was the final missing piece of Ethereum's 2.0 transition to proof-of-stake. Now that Ethereum staking has been functioning smoothly for a few months, the large holders of Ethereum will slowly but surely start staking their ETH for the long term. Other innovations such as liquid staking derivatives or LSDs are also offering more attractive yield on top. The effect of Ethereum's Shanghai upgrade can be clearly observed on the Ethereum staking charts. This chart tracks all of the Ethereum staked on the network, and you see after the Shanghai upgrade went live around April of this year, the rate of new Ethereum staked has saw a dramatic increase and started to go up faster. If you remember, during the staking withdrawals upgrade in April, many people were scared that the unlocking on the old staked Ethereum will cause a massive dump. But this event has also been dispelled. We can see this on the Ethereum full withdrawal charts here. During this upgrade period in April, we did see a month where there were large amounts of staked Ethereum being withdrawn. However, the net total staked amount still increased during this period, and in the months after, we did not see a large amount of Ethereum being withdrawn again. Clearly, there are more Ethereum being staked every month than the amount withdrawn. We see a positive net staking flow over the 24 hours, 7-day, 30-day period, and even on the 1-year period, we have had 9% increase in the Ethereum staking ratio. I fully expect this percentage to continue to go up in the next 2 years, and for Ethereum's staking ratio to reach at least 40 to 50%, which are the industry average. The TLDR is that the increase in staking demand leads to an increase in long-term holders of Ethereum, which ultimately leads to increase in buying demand for ETH. The last major catalyst coming to Ethereum is the potential for a Ether Spot ETF coming to the US markets. Similar to the Bitcoin Spot ETF, we could see another Ethereum Spot ETF launching in the next year that can open the floodgates of institutional buyers to Ethereum. This is a spillover effect coming from the Bitcoin ETF hype. When Grayscale won their Bitcoin ETF lawsuit in September, the judge ruled that the Grayscale Bitcoin Trust should be considered as a potential spot ETF. The reason for this win is referring to the Bitcoin futures product trading on the CME exchange, which is a regulated product approved by the SEC. Therefore, a Bitcoin spot ETF should be considered equally by the SEC. Now, the analysts quickly caught on to this news because the CME exchange not only offers a Bitcoin future, but also an Ethereum futures. So perhaps the SEC also needs to recognize an Ethereum spot ETF as legitimate and review their applications equally. Unsurprisingly, we saw a slew of Ethereum spot ETF applications after this event, with ARK Invest, 21 Shares, and VanEck joining the race. The Grayscale Ethereum Trust is also gaining strength, and its discount dropped to the lowest level in the past year. This means traders are buying up the trust to take advantage of the discount, as more and more people expect this Ethereum Trust to be turned into a legitimate Ethereum ETF in the near future. With the SEC almost guaranteed to approve BlackRock's Bitcoin ETF, I fully expect an Ethereum spot ETF to launch as well. The actual timeline will most likely be later than the Bitcoin ETF launch that's happening before March 2024. So perhaps by the end of 2024, we could see an Ethereum spot ETF. Before we get into my price predictions for Ethereum, if you're liking this video, don't forget to drop a like and subscribe for more deep dive videos just like this. In order to define a price target for Ethereum, we need to have two metrics, the future supply and the market cap target. Let's look at the supply first. Since the Ethereum 2.0 merge and the EIP 1155 upgrade, Ethereum has completely stopped growing in supply and even became deflationary in the past year, dropping by about 0.25%. The exact amount of Ethereum burned per year depends on the activity of the network. Since we know that Ethereum's activity is at the lowest point in the past year during the bear market, it's safe to assume that much more Ethereum will be burnt in the next 2 years. As a conservative estimate, let's just assume that Ethereum supply continues to stay the same by mid-2025 and does not get burnt. This gives us 120 million Ethereum total. Okay, now let's look at my price targets. My conservative estimate for Ethereum is for it to reach its previous all-time high at around $5,000. This is the bare minimum target for the crypto cycle to continue. If Ethereum cannot even go back to its previous all-time high after all the technology and institutional adoption, then the overall altcoin market might not be worth investing in. For my optimistic target, I think Ethereum has a chance to do about a 3x return from its previous all-time high. This puts it around $15,000 as a price target. Here are the main metrics backing this claim. Number one, Ethereum has done about a 320% return from the 2018 top to the 2021 top. As Ethereum has become a much more mature asset, it should provide a diminishing return each cycle. So I don't think this time Ethereum can outperform the last cycle's return. This puts an upper bound to the next bull run peak at around $17,000. Number two, I also expect Ethereum to outperform Bitcoin in this cycle. This has always been the case as the ETH versus BTC price ratio has gone up every cycle. I have covered my price prediction for Bitcoin by 2025 in another video. You can find it in the description. Essentially, I expect Bitcoin to do a maximum of 3x return from its 2021 all-time high of $66,000, which gives an upper price target of $200K per Bitcoin. Now again, assuming Ethereum will outperform Bitcoin, then it also gives Ethereum a maximum of 3x target to around $15K. Number three, many analysts are predicting the overall crypto industry to top out at about $10 trillion as an asset class in the next cycle. This puts it right below the valuation of gold at $12 trillion and private equity at $11 trillion. Ethereum currently takes up around 20% of the total crypto market cap. Assuming that the other blockchains will start to converge on Ethereum as layer 2s, I think this market dominance will only increase by 2025. So taking 20% of 10 trillion gives us a $2 trillion market cap target for Ethereum by 2025. Dividing 2 trillion by the 120 million supply of Ethereum gives us a price target of $16,000. So can Ethereum hit $10,000 in the next bull run? I think the answer is yes. My price target range for Ethereum is between $5,000 to $15,000 by late 2025, which puts the average return right at $10,000. But keep in mind that the run will only start after the institutional buyers have finished accumulating and the ETF comes in 2024. So I am expecting Ethereum's major rally to start in late 2024 and early 2025. I am heavily buying Ethereum right now as I believe we are in the last stages of the bear market accumulation phase. After all the research I have done, it's clear to me that Ethereum's adoption is stronger than ever. From the retail user onboarding, the death of the Ethereum Killers, the staking demand, and the institutional ETF adoption, Ethereum is poised to lead the market in the next cycle. The only reason that ETH is still so cheap today is simply because of fear and a lack of research among retail investors. From the current price of $15,000, I see Ethereum as an easy 7 to 10x return in the next 2 years, and I'll take that bet any day of the week. Okay, that wraps up today's video. If you want more investing guides just like this one, I have a few more videos planned for some of my long-term conviction bets. Make sure to subscribe to the channel so you don't miss them. Also, follow me on Twitter at virtualbacon0x. I drop a lot more unfiltered alpha that are too quick for these videos. Also, check out our free newsletter and join our exclusive Telegram group on virtualbacon.com. We publish daily altcoin alerts and weekly market deep dives. Thank you for watching and see you in the next video.